Good day, ladies and gentlemen, and welcome to the show on this Wednesday, the 23rd of June, 2021. Thank you guys for tuning in. I really appreciate you guys being here. Now, I'll tell you guys what. The power grid. We know how deplorable the power grid is in Texas. Practically the whole state went out. And, it wasn't really all that much, really. It's just that what happened was they got an ice storm. And people needed extra power for run space heaters and stuff, in their homes. A little bit of an extra power strain on the power grid of Texas took it down. Now what I hear is, do you know how much the population of California is? Massive population in California. And I hear that the power grid in California is in just as deplorable, maybe worse, than the power grid in Texas. Grid failures in this day and age are not an option. I'll tell you why. If a grid failure were to continue for more than a week or two, it would be very hard in that area to maintain law and order. And also the power grids are made out of metals. And they're very vulnerable to attack. The only reason why the power grid's not attacked I'm not talking about cyber attacks. I'm talking about attacks where people go in and try to rob the metal from the power grid. And the only reason why they don't do it, and they try and they get electrocuted. They do. They actually try to rob a live power grid. But when a power grid's down, it becomes much more vulnerable to attack. In that form of them trying to salvage metals from the power grid, thieves, talking about. And if a power grid was down for several weeks, I hate to think what they might do to it. They might strip it. It might be awful hard to maintain law and order. And then once things are stripped on a power grid, you can't turn it back on, ever. Now, how do you maintain social stability if you get a wide area or a vast, large population and they got no power grid? And so this infrastructure plan is actually a very good idea. The infrastructure all across North America needs repair. Tremendously needs repair. It needs updating. And this is part of it, part of the whole structural integrity of the system has been weakened. Let's get in and take a look at the markets now. And so let's start the charts right here. Take a look at what's going on in the markets. First thing we're going to take a look at is the silver price. It popped. Not a lot, but 39 cents right now. And this is to be expected, really, considering how tight they are on physical supply. The constraints on physical supply right now are just enormous. Yet the price has been staying down, and this is because of paper manipulation, and this can't continue forever. I think that Basel III is going to start to put an end to this paper manipulation, but Basel III is being implemented slowly over the rest of this year, coming into full implementation in the first of the year, next year. And once it comes into full implementation, it's going to be very hard for them to manipulate the price anymore on the precious metals. This is going to strengthen the Shanghai exchange, where they've been dealing for a number of years now in real metal. It's not so much a paper, it's like the COMEX, it's real. It's real. It's in the real world. It's not off in fantasy land, Okay, let's take a look now at the gold price. Gold today is up $9.40. Took a little pop too, $17.88. Now let's take a look. I'm going to tell you something. One of my viewers said that they just might front run what's going to happen with Basel III. Now, at the end of this year, it comes into full implementation. Anytime between now and the end of this year, they might start front running what's inevitable, which is the real trade of gold and silver. And that means it might break free if they front run it. And I'm talking about break free. I'm talking about at the end of the year, we could be looking at $2,300 gold, and we could be looking at silver that's pushing, trying to head toward $50 by the end of the year. So silver and gold are a great investment. They're going to do their job. You know what their job is? To keep up with inflation. And this paper manipulation is coming to a close. And so gold and silver are going to maintain your purchasing power through the coming destruction of the fiat currencies. Okay, let's take a look at cryptocurrency today and see what it's doing. It says market cap zero. Well, that can't be true. They just haven't put it in there on coin market cap today. We're looking at 34,211 for Bitcoin. Bitcoin doesn't want to go below 30,000. I think if we continue in this bear market, it will. I think there's going to be a pretty solid floor around 20,000 underneath it, you know. But there is other support levels below 20,000. Strong support levels, probably in around 15,000. And then there's a huge support level. I don't want to tell you guys how low it is. Okay, I'll tell you. About 6,500, there's massive support. You know, but I don't think it's going to go. Do I think it's going to go down to 6,500 in your wildest dreams? I think that would be a dream come true for a lot of you guys out there. I don't think you're ever going to see it. I think if it does go down to 20,000, it's going to get awful sticky about going below 20,000. You know, and so I'll tell you, there's a tremendous upside potential to this, so because it's actually trying to become the world reserve currency. It's either going to be successful or it's not. If it's not, it's going to be killed by something, and because it's on that path. It's like an arrow heading for the target, and it's going to make that target, which is world dominance, world reserve currency, or it's going to get diverted somehow and it's going to fall to the ground. That's going to be it. One of the two. There's no middle ground for Bitcoin. It's all or nothing. Okay, now let's take a look at the Dow Jones Industrial Average today, and it's down 23 points. This market has peaked, it's stopped, it's for now, unless more stimulus comes in some measure or form. This market's flatlined. You ain't gonna make gains in the stock market. I know for the longest time now, guys have bought the dip and made a lot of money. It's over. There's no money to be made in this anymore, guys. Not unless massive new stimulus comes in. You know, it's pretty much over, I think, for this. It's going to be doing good just to hold 34,000, you know, or hold that area, and not start to lose, go down, down, down. And as it goes down, 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 you don't make any money. If you're getting lower lows, you're not going to make money. You have to get higher highs in order to make money. You know, higher lows and higher highs to make money. Okay, now let's take a look at the crude oil today. And it's up 73.30. Now, I said once it passed $70, it's going to be on its way to 80. It's on its way to 80. When it gets to 80, I think it's going to be on a pit stop and on its way to 90 for crude. You're going to pay more and more at the pump. And because this is an oil-based economy, everything's made from oil. Even your food you buy in the grocery store took trucking to get it there, diesel fuel. The packaging, you know, if you buy a jar of mayonnaise, that jar is not glass anymore. That jar is made out of plastic, and plastics come from oil. You know, everything's oil, you know, in this economy. And so when you see the oil price go up, you're going to see that translate itself into consumer inflation. And the oil price is going to continue to go up. Move index today, 58.64. And the move index is starting to move back down again. It was up in the 60s there, but it's crested and peaked. It's coming back down. That means more stability is coming to the credit markets. Let's take a look at bonds and rates today, and we're seeing the bond yields climbing a little bit. On the long end, you know, it looks like it's up 2 basis points, 21.2 on the U.S. 30-year, and the U.S. 10-year is 1.489. and it's up 1.7 basis points today so far. The dollar index, we're looking at 91.70 on the US dollar index. It's basically going along sideways right now. I think there's one last hurrah coming for the dollar. Yesterday I talked about how I thought that we were going to have a crash just after the end of the New Year's, going into next year, sometime January, February, March, April, May, June, in those months, somewhere in those months, we're going to have a crash. And the reason why I said that is the money has gone exponential a while ago, and that hockey stick is going almost straight up now. The stimulus measures that they did at the beginning of the COVID crisis lasted quite a long time. It was $2.2 trillion. It moved the stock market up a long way. But you have to understand, they need more and more money in order to keep things moving up all the time, more and more. And this last stimulus measures are not going to last as long. I'm just estimating how long I think they're going to last. I think they're going to last to the end of this year, all the money that they injected. Once that money really starts to run out into the new year, well, then they're not going to do more because they expect the economy to actually sustain itself now at this point. It's not going to. Those are unrealistic expectations because the entire economy now is run on stimulus and credit. They think, for some reason, they think that they can pull the credit away and the economy will run on its own. They're in for a big mistake. It's going to cost them because the further they let it fall, because they didn't do stimulus, and the old stimulus has run out, the more it's going to take, more stimulus it's going to take to bring it back to a level of normal. And if you thought the crash at the beginning of the COVID crisis was bad, this crash is going to be worse because we've built up more and more debt, more and more credit. Credit is debt. And it wants to deleverage. That's what it wants to do. That's its natural inclination, is to deflate. They can allow it to deflate, but they will allow it to start to deflate, and they'll sit back and watch it. The longer they let it deflate, the more money it's going to take to bring it back again, and that's going to send us in a spiral into the inflationary territory again. It's almost like a whipsaw, this whole thing, It's moving back and forth between deflation and inflation. And every time they have to bring it back to inflation, the inflation's going to get worse. They can't let it whipsaw into deflation because it would rip the system apart. That's a no-no. They'll never let that happen. And so we're going to be playing for a little while these deflation, this whipsaw thing between deflation and inflation, until finally inflation wins the day, ultimately, in the end. How long is it going to take? Somewhere in 2022. It's going to start to really move in because everything's moving faster and faster. This is a quickening toward the end of this. We're deep into the quickening now. And when it hits, you're going to see areas where infrastructure goes down. And I've been talking about this in my shows. If you're in one of these areas where the power grid goes down, infrastructure fails, like possibly California, or you already see the states that are a danger point for this. The states that are having trouble with it now. You might have to get out. Might be no choice. You might have to just lock the door on your house, and you might have, if you got a good car that's all paid for and everything, you might have to tear up some garbage bags to make curtains, and some clothespins, and you might have to get a jug of water and try to make it as best, tear out the rear seats, and so you put a bed in there and make it your house. You might have to make your car your house, and if you do come back to your house maybe 6 months or a year later, you might find nothing left of it because once the power grid goes down, then the scavengers will be numerous, too numerous to mention, and they will just picture in a desert, when you got a whole. If the guy was walking through the desert, he's starving and hungry, he's got no water, and he's drying out. The vultures are all sitting up there on the line looking down at him, dozens of them, and they're drooling as he's walking. That's the scavengers. There's endless amounts of them. They're like the farmers trying to fight the crows off from eating their corn and their crop. There's just too many. I mean, yeah, he can put a scarecrow out or whatever, but if there's swarms of crows, he ain't gonna help. It's just too many. They just keep coming and coming and coming. Anyway, thank you guys for listening. Like and subscribe. If you're in California, my suggestion is to strategically relocate. You know, I mean, that state has got problems. Uh, New York State, problems, Uh, Texas, grid problems. Will they get the grid problems fixed in Texas? I just don't know. That's why we need this new infrastructure plan. Thank you guys for listening, and we'll catch you in the next show. Bye-bye.